Bitcoin, a revolutionary currency or the ultimate scam? Warren Buffett calls it worthless, while supporters hail it as the future of money. In this video, we'll explore Bitcoin's origins, its potential to change the financial system, and why it divides the world of investing so sharply. Nick with you and we are start. When Bitcoin first appeared, many people were unsure of its value. But Warren Buffett was crystal clear about his disdain for the cryptocurrency. He famously declared, "If you told me you owned all the Bitcoin in the world and offered it to me for $25, I wouldn't take it. What would I do with it?" His longtime business partner Charlie Munger went even further, labeling Bitcoin as stupid, evil, and something that makes people look bad in comparison to others. This skepticism from two financial giants has persisted since 2018, yet during this period Bitcoin's value skyrocketed by 400%, compared to the 75% growth of their investment company Berkshire Hathaway. This raises a compelling question. If Bitcoin is so bad, why is it doing so well? Could these icons of financial wisdom actually be wrong? To understand Bitcoin's appeal, it's crucial to grasp its unique characteristics. Bitcoin is often described as the apex property of humanity because it addresses flaws in traditional currency systems. Unlike government-controlled fiat money, Bitcoin is decentralized, with its operations distributed across millions of computers. It also has a capped supply of 21 million coins, ensuring it cannot be inflated. These features make Bitcoin a hedge against the silent tax of inflation. For example, consider a man named Ryan in the US during 2020. He had saved $100,000 over 12 years to buy a house. But by 2023, inflation and rising prices eroded the purchasing power of his savings. His $100,000 could no longer buy the same house, leaving him effectively with $70,000 in real terms. In countries with worse inflation like Argentina, his savings would be worth only $15,000. This illustrates how traditional currencies often fail to preserve wealth, making Bitcoin's deflationary design incredibly appealing. The issue of inflation isn't new. It has plagued currencies for over a century. The US dollar, for instance, has lost 99% of its value over the past 100 years. The culprit? Central banks like the Federal Reserve, which frequently print money to stimulate the economy. This devalues existing money and erodes the savings of hardworking individuals. Historically, almost every currency has eventually collapsed. Even the dollar, the winning currency of the 20th century, has been devalued massively. The root cause is that all fiat currencies are controlled by central authorities that can legally and silently dilute their value. In 2009, Satoshi Nakamoto, a mysterious figure whose identity remains unknown, introduced Bitcoin as a solution to these problems. Bitcoin was designed to be decentralized, inflation-resistant, and highly transferable. Unlike gold, which is cumbersome to move, Bitcoin can be sent across borders instantly. Moreover, it offers unparalleled portability. Your wealth can be stored in your head by remembering your private key. These innovations make Bitcoin a revolutionary form of currency. However, this raises the question, why do financial legends like Buffett and Munger still detest it? Buffett and Munger's opposition to Bitcoin stems from their investing philosophies. Buffett has always favored assets that produce cash flow, such as stocks, bonds, or businesses. He dislikes speculation, which he views as buying something that doesn't generate value in the hope that someone else will pay more for it later. Since Bitcoin doesn't produce income, Buffett dismisses it entirely. Munger, on the other hand, takes an even harsher stance, calling Bitcoin rat poison and a currency for criminals. His criticism is partly based on Bitcoin's association with illegal activities. Criminals often use Bitcoin to remain anonymous, avoiding regulated financial systems that could expose their identities. This, Munger argues, makes Bitcoin not just impractical but morally problematic. Bitcoin's value is unlike traditional investments. Stocks and bonds generate returns even if no one wants to buy them, but Bitcoin's worth depends entirely on demand. If people stop wanting Bitcoin, its value could plummet to zero. Conversely, widespread adoption could make it incredibly valuable. For instance, if Bitcoin's market capitalization matched gold's $11 trillion, its price could increase 15-fold, or even more if it surpasses gold. Bitcoin is either a groundbreaking solution to broken currencies or a ticking time bomb. Its future is uncertain, but its impact on how we think about money is undeniable. Will Bitcoin thrive or collapse? Let us know what you think in the comments. Nick was with you, thank you all, and see you again in the next video.